A housing market shift is happening. How do I know? Well, recent market data doesn't clearly show it yet, as the numbers show that homes are still selling above list price, and the average and median sales prices are up double-digit percentage points from last year at this time. We are also in the summer season when many people take a break from their real estate goals, so that does factor in to some degree. However, there are other indicators that are starting to trend upward, which are signaling a shift in the market. First, more listings are doing price reductions. In fact, there have been 72 in the last 2 weeks in my local market. Further, even builders are now doing price reductions on some of their inventory instead of the usual incremental price increases. Secondly, the days on market metric is increasing, meaning more homes are staying on the market longer before going under contract. This is in contrast to the trend earlier this year when homes would go under contract within the first weekend. Because homes aren't selling as fast, inventory is also increasing. Another indicator is that only the best move-in ready homes are getting multiple offers and selling over list price. Even with that, they are only getting 2 or 3 offers instead of 10 or more as we saw earlier this year. This is an indication that buyer demand, while still strong, is waning. In this episode, I'll explore what is causing this shift and what strategies buyers and sellers can employ to be successful in this changing market. Hi everyone, welcome to Real Estate on the Front Range, my weekly podcast where I cover all things real estate here on the Front Range of Northern Colorado. Join me every week to get market updates, tips, and information on relevant topics to make sure that you're fully informed before you buy or sell your next home. This is Sean Gilliam, your host, and I look forward to you joining me on Spotify, Google, Apple, or whatever your favorite podcast app is for the latest episodes. Welcome back to Real Estate on the Front Range. Well, let's get back to this important topic that is on everyone's mind. Are we having a housing market shift? Based on the data I'm seeing, the answer is yes. So what is causing this shift? First, higher mortgage interest rates are giving some buyers pause. With higher rates, buyers' purchasing power goes down, which is compounded by the fact that home values are still increasing. For example, Lawrence Yun, the chief economist for the National Association of Realtors, stated that on the same $300,000 mortgage, the monthly payment has risen from $1,265 in December to over $1,800 today. That's painful and consequently will shrink the buyer pool. Another factor is that inflation is also causing some buyers and sellers to hold off. The rise in the cost of everyday living makes some people want to hunker down until it's over. Throw in the potential for a recession, and still more people are sitting back and waiting to see what will happen. However, there are still buyers that have financial resiliency, and they typically are going after the nicer homes in the market. It's important to note that when the market shifts, it doesn't happen all at once. There are gradual signs of a change, and over time, it becomes more pronounced. Significantly rising mortgage interest rates, though, have caused a more pronounced change in the market in recent weeks. But this isn't bad news. We aren't going from a strong market to a housing crisis. We are going from a strong market, if even unhealthy, to a more balanced market. This is actually a good thing. Buyers will be able to purchase a home without having to write offers well over list price. This is especially good news for buyers that don't have the additional funds to write such offers. So how will this impact the housing market overall? As you know, home values have skyrocketed in the last couple of years to the tune of 20% increase year over year on a national level. What we can expect to see is home values to continue to rise, but at a much slower rate. It is forecasted that home values will appreciate about 3 to 4% each year through 2026. While this is a marked reduction in appreciation, it is not depreciation. So how should buyers and sellers change their game plan when it comes to engaging in this housing market shift? For buyers, while mortgage rates are high, in all likelihood, home values will continue to rise in the foreseeable future. It's also possible that interest rates will rise as well, making it more costly to wait. The best strategy moving forward is to buy sooner rather than later. The benefit of this strategy is that after purchasing a home, you will likely see moderate gains in the value of your home in the next few years. With regard to the higher interest rates, you can always refinance several years from now if the rates go lower again. And even if they don't, 6%, which is what we're averaging right now for a 30-year fixed rate mortgage, is still fairly low compared to interest rates in years past. Pair that with the other benefits of owning a home, such as a tax deduction for your mortgage interest payment, building equity in your home, and simply having a place to call home. In this shifting market, buyers will have less competition. As such, you will have more negotiating power in a transaction. For example, you won't have to go well over list price to get your offer accepted. Further, you won't likely have to waive the appraisal or inspection or any other contingencies. Also, keep your eye on those homes that have been on the market for a couple of weeks or more. It doesn't necessarily mean there's something wrong with it. In this market, these properties could be a golden opportunity to get a great home without the competition. Oddly enough, if a home has been on the market for more or for longer than a week or two, buyers move on and ignore it. Use this to your advantage. For sellers, it's important to know that you are not in a commanding position in this changing market as you were even a month ago. Knowing that buyers are more selective about the homes they are willing to write offers on, it's essential that you have your home in move-in ready condition. Many of the things you can do to accomplish this are easy and inexpensive. Some updating may be a good idea if you can afford to do so, such as improvements in the kitchen and bathrooms, etc. This will increase the likelihood of getting strong offers from capable buyers, and as a seller, it's especially important that you price your home well. Pricing it at market value or even slightly lower will attract more buyers and will potentially get you multiple offers, even some above list price perhaps. If you price it too high, the home will sit on the market and you will likely have to do a price reduction or two, even below market value, to attract buyers. While it is still a seller's market, you will have lost some of your negotiating power in this market shift. Don't expect buyers to waive the appraisal or the inspection contingencies. Being flexible and willing to compromise to a point will help you attract buyers and make for a smooth transaction. So don't panic. The shift we're experiencing is a much needed change. We are moving toward a more balanced, healthy real estate market. I hope this was helpful. If you have any questions, don't hesitate to get in touch. You can reach me at 970-313-6706, and I look forward to seeing you at the next podcast. Take care.